It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Light Forex Social Trading. Spend your time doing what really matters to you.
Good morning. It's the 2nd of July 2019. It's 8 a.m. CET. Piotr here, and this is the live coverage of pre-London Open here on Light Forex Global YouTube channel. So again, good morning. So 6 months left. Third quarter started. We are post G20 meeting, and the second half of the year dollar started from the strong position. We had few important numbers, but last night the most important thing probably that was the RBA rate decision. So they decided to cut by 25 basis points to 1%. So we are going to check what is going on with Australian dollar as well. Plenty of things. Most probably we will try to. We are not going to have enough time to cover all of them, but we'll try to get back to all these important things during our afternoon meeting. More about that within the next few minutes. Let's start with risk warning, guys. Please bear in mind, trading FX on margin, trading crypto on margin carries a high level of risk, may not be suitable for all investors. You can sustain a loss of some or all or initial investment, so please do not invest the money that you cannot afford to lose. Seek education, gain experience before risking real money. However, past performance doesn't guarantee future results. Okay. So where we are, let's start with this 25 basis point cut from RBA, meaning that we are going to have a look. We are going to check what is going on Australian dollar. Let's start with Australian dollar versus US dollar. All right. So we saw huge sell-off of Australian dollar yesterday, but I wouldn't say it was related to Australian dollar. I would say it was because of overall American dollar strength yesterday, right? So the bulls on the dollar, they stepped in yesterday, and the US dollar was on a strong foot yesterday. Now, important thing. Either we are going to discuss the latest weakness over here. Now, that's from where we made new low, taking into the consideration what we have here, right? To the left, all right? I'm not talking about this spike to the downside on the 3rd of January, all right? We are talking about the price action over the course of this year. So the combination from the 7th of June and 10th of June, right? From here we started to move to the downside, right? So if we agree with this 7th of June range, right, as a short accumulation then sell off, right? So that price action, this move to the upside, right? This move to the upside lately towards end of the June, right? A move above with yesterday strong pullback, right? It might be treated. I'm going to change color of that line because we are working on a daily chart, meaning that we have to use green color, right? Whatever is going on the daily is with green color. So that's, as you can see, swing high over here, right? We took out the stops above. Okay. We took out the stops above. And yesterday, strong pullback, right? So in that case, looks like is a failure. So from that perspective, the Friday range, especially the Friday daily open and the Friday low, it might work right now. As first supply, first visible supply. Okay, so that's very, very, very important right now. Now, one can argue, Piotr, but the latest raising day was here. We are talking about 11th of June, right? So we can also discuss that the move to the downside was from the high from the 11th of June, from here, right? So in that case, yesterday price action might be treated completely differently here. What I'm talking about, all right. In that case, right, the yesterday strong move to the downside might be treated only as a retest of broken supply, where markets show the weakness, right? We moved above this level, and remember, we were discussing during the webinars, right? When I was much younger and I was listening to the CNBC guys or Bloomberg guys, they were talking about, oh, I'm buying this dip, oh no, I'm selling this rally, but they never explain exactly what they mean by that, right? Or usually they didn't. So what we are talking here, we are discussing bear's position, and right now I bet there are few bulls around, they are gonna to buy yesterday weakness, because they are buying into the dip where markets show the weakness last time. So once we took out these levels, right, once we cleared that supply, now demand should be visible. And look at the price action after the yesterday fireworks to the downside. Look at the price action over the course of Tokyo session, especially after the RBA, they cut. And Aussie is reacting totally opposite to what some were expected, right? Completely different to some expectations. Okay, so we know where we are, but in case of the breakdown here, there is one more thing where I do believe another bullish price action might be in place. If we are going to break through 69.50, we may expose 68.50, and we may try to finish the business over here, as you can see. If you don't know what I'm talking about, you are more than welcome to visit the archive section on the YouTube, on this Light Forex Global YouTube channel, and check our 3-part webinar we had, educational webinar we had in June. Then you are going to know what I'm talking about. So let's switch to intraday chart, and let's have a look what we have here. So there is a clearly visible supply higher towards psychological 70 level, all right, based on what we were discussing here, what we saw on Friday. But I'm not gonna be surprised if market will try to clear that one, right? Because we are talking about the whole range on Friday, the whole Friday. As a first, I do expect levels related to the Friday open, Friday low, but trying to create some kind of a swing high, another swing high, or maybe over under, we might see attempt from the bull side to go higher. And I think that 70 30, 70, 50, it's a much more important. And I'm gonna to show you why I think, or I will try at least. That might be the case of the business finishing around 70, 50, 70, 60. Over, under. Actually, we hit that level on the 1st of May, but it was some time ago. So here we have another possible stops over here, just to close the gap a little bit higher. We have the lines on the chart here, meaning that we were discussing this possibility earlier, right? Plenty of additional levels to the upside. So a lot of work has to be done from the bull's perspective to try to cancel overall bearish view here. Anyway, let's switch again to the hourly, and let's have a look what we might see from the intraday perspective. So there was a cut. There was a spike to the downside after the RBA decision, right? Immediately, we moved out of 69.50 zone, all right, based on what we have on daily. So if you are bullish here, you don't want to chase the market, especially that after this initial reaction, there is no follow-up. There is no continuation to the upside. So I do believe that we might see slow move to the downside, and this is the today's low, yesterday low. And if we are going to look closely based on what we have inside this green box, again, green box is related to the daily chart, meaning there is some demand based on the daily chart, but we may try to find something based on intraday price action. And I have something here a little bit lower, meaning that yesterday low and today's low, it might be some kind of the stop count to the downside, and we might hit 69.50, right? So from the bullish price action, if we are going to see slow move to the downside like this, all right, I may try to look to the long side, right, around the low, post RBA low, right? So the post RBA low, based on this early chart, it's like line in the sand for both bulls and bears. Then if we are going to see the strong close below, then that's gonna be the whole supply on intraday chart, right? But for now, as long as we hold this low, post RBA low, bullish activity is expected, right? But you don't want to chase the price. You want to see a little bit lower levels. We retested this early open right now, and there is a reaction to the upside, right? So depends on the price action we are going to see over the course of the London session. Yeah, I'm going to try to buy lower, but in case you are a bear, right? So the simple measure of the 1-to-1, right, is showing that we might hit and test this supply in that case based on the daily, but inside that supply, I already see where we can try. We are talking about this base over here, and look, 1-to-1 from here, ideally 70.02. That's where I'm gonna to look from the bearish perspective, right? Okay. In case of the move to the upside higher, I think that the combination of the Friday price action and yesterday post G20 meeting price action, that's going to be the key. We are below weekly open, right? So in that case, bears still got the chance. All right. So the good thing from the Australian dollar bulls perspective is that there was no commitment, no clear declaration that, yeah, we are going to cut again, right? So that's the good thing. That might be because it wasn't there, this declaration, it wasn't there. So I do believe that that's why we've seen this type of the reaction. There was a cut, spike to the downside, but then statement, no clear declaration that, yeah, one more cut is needed, right? They saw the stabilization in the housing market when we are talking about the big Australian cities, right? They are going to watch the development in the labor market, right, closely. And they will try to adjust monetary policy if needed to support sustainable growth in the economy and the achievement in the inflation target over time. That was the sentence from the statement. So that's how I see the Australian dollar. Trying to summarize, I'm going to watch from the bulls perspective, I'm going to watch the price action around 69.55 ish, and to the downside I'm going to watch initial reaction around 70, but I think 70, 30, 70, 50, it's much more important. In case of the risk of sentiment, let's say in the future, right? Let's say we are going to have risk of sentiment in the future based on the current 1% interest rates. Aussie yen might be very, very interesting alternative, right? Till now it was or in the past it was quite expensive to try to short Aussie yen. Right now it's much cheaper, but that's in case of the risk of sentiment. All right, so we know from the major Australian dollar cross with US dollar where we are, what we might expect. During our afternoon meeting, because there are very nice situation from the bulls perspective. There is because if you are an Australian dollar bull, you might not want to buy all Australian dollar versus US dollar. You may try to find weaker currencies to try to buy into, right? And the Euro Aussie yesterday price action suggests that might be some kind of the fireworks over there. All right. So I'm not gonna be surprised to see a little bit stronger Australian dollar versus euro, for example, right? But the other Australian dollar crosses we are going to try to discuss during our afternoon meeting. And just a friendly reminder, today at 2 p.m. CET, we are going to cover New York session live here on Light Forex Global YouTube channel. So yeah, I think that we discussed Australian dollar here based on what we have in terms of time, very detailed. So right now, because we are running out of time slowly, so let's switch and discuss the majors after short break. All right, so we are here right back. So let's have a look what we have from euro dollar perspective. Here, very strong move yesterday. Probably there are plenty of reasons why why we saw what happened yesterday. First thing first, in my opinion, the overall market reaction into post G20, right? Especially to the Trump comment that, yeah, let's start new game with China, let's restart everything, let's start this talk again. Guys, we were discussing this outcome of the G20, especially the meeting Trump with Xi. We are discussing what's going to happen in advance, before it happened, right? Why? We agreed. We all agreed that Trump doesn't need this trade agreement right now. Come on. What for? He needs that closer to the election, guys. He needs that closer to the election. So we knew it. There are gonna be talks. So, market takeaway from that is the positive sentiment, right? So why dollar was stronger? Because dollar was stronger when there was tensions, right? It should be weaker. Wait a second. My way of thinking in that case is that because of no new tensions in that main line, US-China, when they also agreed that that might be the strong partnership, strategic partnership, that's taking a little bit of the pressure off the Fed. Now, Fed it might be more dependent on internal data. That's my way of thinking. I might be wrong, and tell me if I'm wrong in your opinion. Heimer, how you doing? Hi Muhammad, good morning. So the first thing first, I think that the market takeaway here, especially on euro dollar, especially on overall when we are talking about the dollar and what happened yesterday, is that there is a little bit off in terms of the pressure when we are talking about the Fed. Now, of course, we might see reaction to the upside or to the downside on the dollar, mostly based on the data. But this current week is a specific one. It's a very short because of the 4th of July, when we are talking about the US, right, on Thursday. Why is so specific? Because not everyone is going to have long weekend. Why? Because on Friday we do have non-farm payrolls. So it's a specific one. But let's get back to euro dollar. So a little bit of when we are talking about the pressure related to the Fed. That's the first thing. The second thing, because Trump is restarting talks with China, right? So for sure there was a possibility that he's going to find another place, right, with tariffs. So there you go, European Union. European Union. There are 4 billion in potential new tariffs on EU. So there is another reason. The third reason, I think it might be one of the most important. Yesterday PMIs. Oh. Whoa. That was weak. The French is still okay above 50, but Italian below the expectation, below 50. German 45. Whoa. So I think that was, yeah, so we had 3 good reasons to push euro dollar lower yesterday. Now let's have a look what we have here on the euro dollar from the chart perspective right now. So we saw the attempt to break higher 2 weeks ago. Last week, because of the G20, mostly, especially from Wednesday till Friday, we had 3 dodgy candles, right? So we were trying to hold every time we saw attempt to retest 1350, 1340, 1360. We were discussing these levels. There was some buyers stepped in and they were trying to hold these levels. Now, yesterday, strong move to the downside, right? And now the important question is, I have to change a little bit the zones after this price action from yesterday. That the price action we've seen on the 21st of the June, right? So that was the breakout candle. So when we are talking about this breakout candle, we are very interested in what happened at the opening levels and at the low in that case, right? So that was the break to the downside yesterday, right? Clear break. So the low of the day was below the low of this candle, right? So now taking into the consideration again the range from the 20th of March, the supply we've seen when we were testing this move to the downside over here, overall this price action from here, so meaning that probably when we are going to try to retest these levels, we might activate this supply again, right? So very interesting situation, especially that what we discussed lately, it was this 1-to-1 move over here, right? So it was done. It was, yeah, nothing extraordinary in favor of euro happened over the course of the G20 meetings. So short-term buyers simply took the profit, sellers took over yesterday, and that's what happened. Now, yeah, that's what happened. Now we have to figure it out what might happen in the near future, especially during the London session. So, as I mentioned, I have to make some, here some corrections. And to be honest with you, I'm not gonna be surprised if we are going to see a little bit deeper move to the downside, at least towards 112. Now, overall, I think that we can assume that we are still inside some kind of the range. So we have to be very, very careful when we are talking about the particular possible demands or supply zones levels, all right? Why? Because what we discussed during the education webinar, that it looks completely different when we are trading the ranges, and it looks completely different when we are trending, when we have trending market, right? So it looks a little bit different. But now let's have a look. Let's try to make some kind of the combinations around the latest move to the downside. So that was the latest move to the downside, was like this, right? So let's have a look. Let's have a look to the let's have a look to the left side. From here it was similar in size, right? From here it was similar, wow, in size, right? And finally from here it was missed a bit. So as you can see, to the upside, last two moves to the upside was equal, right? When we are talking about the downsides, let's have a look today, just based on this easiest possible approach. Oh, jeez. So let's have a look what we might see. So the first initial reaction, and we might hit the previous demand which was broken, right? So we might see some kind of the over-under creation over here, right? But that's gonna be the first one, and it's gonna be related to the upper shadows. And you know my approach to the shadows. I do prefer the bodies, right? So in that case, I'm not gonna be surprised if we are going to see the bounce, right? And we might retest this over-under. So in case of the future price action, so right now, the move to the downside should stop something around 1250, right? Over here. And we might see attempt to bounce from here to fulfill this over-under. So let's try to draw some lines for everyone to understand what we are talking about. So I do expect a little bit lower levels over the course of the day or tomorrow, right? To hit this 1250, the size of the previous moves to the downside. I'm not, guys, to be perfectly clear, I don't know if it's going to happen, but that's my kind of the trading plan, right? Then after such a move, we might expect some kind of the bounce, right? Now, how high can we go? I think that we might to try to retest this previous supply we've seen before the break to the upside, right? We are talking about here. We are talking about these levels, right? So I would expect the bounce somewhere here. Now, if that's correct, and we are talking that the major demand, but inside the range, so it's maybe not that major. We might want to clear some stops to the downside. But in that case, when we are talking about this demand around the psychological level, we are talking about 112, right? So how high the bounce can be, that the next move to the downside is gonna be similar in size. So when we are talking about that supply, right? Wow, it could be. It could be. So overall, I've got my basic plan. Of course, depends on the price action over the course of the day. I'm going to have to modify maybe this plan, right? But overall, attempt to bounce over the course of the beginning of the US session. Maybe we are going to see the bounce immediately at the London Open, right? So closer to the weekly open, blue dotted line, closer to 1360 in case of the retest of this previous supply. That might be, depends on what's going to happen from intraday perspective, right? That might be short setup for me. In case of the straight move towards 1240, towards the upper shadows, I'm going to monitor closely to see if I can find some buying opportunity over there, right? So that's how I see the things on euro. Oops, I'm trying to clean some stuff here just for us to have it. That was not full move, yeah, and this one. So hopefully we know where we are, right? So let's switch to the smaller time frame. Let's have a look what we have here, right? Let's have a look what we have on the intraday basis, from the intraday chart perspective. The green at the top, right? So this is the one over here after the break. So we were trying to hold over the course of the previous week, and we broke to the downside yesterday, right? So that's what we are talking about. Now, from the intraday perspective, we have the rally base, rally to the upside. Let's place intraday supply, intraday, and that was the intraday possible demand, right? When we move to the higher level, right? That was the possible intraday demand. So let's move. Boom! Yesterday price action, the first reaction, strong first reaction. Strong first reaction was where? At the possible intraday demand. But because this demand was taken off, was cleared in a good fashion, I would say, meaning that the zone over here, the intraday zone over here, which was supposed to work, and at the first attempt, actually it was the demand, right now it should work as a supply. But because we have these lower shadows, and because of what we discussed during the educational webinars, we might to have the chance to adjust a little bit, right? So I'm not gonna be interested in this lower shadow, but I'm very interested in that case of this candle with upper shadow. So in that case, right now, that's my possible supply right under the possible supply from the daily chart, right? So overall, and we have weekly open a bit higher. So in case of the move to the upside, attempt to move to the upside, right? I'm going to try to take the advantage of these levels. Now, we may try again to make it almost to the peak. We may try. I'm not saying it's going to happen, but again, let's use some easy tools. Why? Because algos are programming. To program the algo, they have to use easy tools, right? So, is it easy? Yes, Piotr, it is. So the combination of the Friday pullback and yesterday Tokyo session, it was the one size move, right? Bounce, and the next move during the New York session was equal in size. Oh, easy. So what kind of the bounce I do expect? It's gonna be same way easy. I think we have to change the colors. So let's make the measure of the bounce yesterday, right? Okay, let's make the measure. What can we hit? Oh, is it accident? No. Everything is very, very, very logical. We are trying to predict what may happen. Is it going to work? I have no idea, guys. That's why we have this risk warning at the very beginning of each meeting. But based on this plan, I know where I'm going to try to step in and work with short side. Of course I'm going to switch to, because of the levels from the higher time frames, I know where I can expect some kind of the movement. I'm going to switch to lower time frame, to 5 minutes or 1 minute for execution, and watching closely around 1325, 1335, what is going on a smaller time frame from the execution perspective. Boom! That's it this morning. That's it this morning. Guys, you are more than welcome to join me this afternoon. 2 p.m. CET. In other words, we are going to cover live New York session. Especially the first part. Alright? So, don't be trapped during the London session. Alright? It was my pleasure, as usual, to be here with you this morning. And see you around within the next few hours when we are going to cover New York Open. Have a great day. Thank you, Mer. See you inside. Have a great London session, guys. Take care. Goodbye.
It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Light Forex social trading. Spend your time doing what really matters to you.